Welcome everybody. We are just gonna wait until everyone gets on, but I'm gonna enable the chat here so that everyone can comment. And so I'm gonna, if you could, oh, hello.
I just put that in.
Excellent. For those that are joining, if you could jump into the chat and just confirm that it's working and tell us where you're from and what year your child is in school, whether undergrad or.
Yeah, and what I'd also love to know, if you're willing to share, and it's not completely understand, if you're from a family of divorce, just because a lot of what we're talking about is gonna, impact you. And if you have more than one student going to college at the same time.
Going into the Q&A. Chat is still disabled. Okay, let me fix it again. This happens every time. Divorced mom of triplets. Yeah, thank you. If you guys just want to jump into the Q&A, that's fine for now.
Wow, Roseanne, you hit two of those things at once. Wow.
It's a lot.
Yeah. You might, I'm gonna have to wrap my head around. You have a lot of things that are being impacted.
Oh, we have a divorced mom of twins. Welcome.
Okay, this is perfectly fine. A lot of people, from divorce, which you should be here because you got to learn what's going on. Yeah.
We support you.
Mm-hmm. So Melissa, can you get chat to work or no?
Yep, it is on. So can someone out there test chat for us again? Chat should be enabled. I'll do one more test. There we go. Hello. Thank you, everyone. It's good to have our support team out there in the field. Hello, Carrie. Brian, hello. We're from the East Coast. We were just chatting about what a great weekend it was out here.
Yep.
Thank you, Roseanne. Excellent. Divorced mom of an only son. Excellent. We're going to help you. Excellent. Okay, people are still joining, Deb, so I'll give it another 20 seconds.
Sure.
And we'll jump in. Hello, Gretchen.
And anybody out there, if you also have a current college student, kind of curious if you're joining as well, because you are going to be impacted, just to see what the changes are. Yep. So Jessica, first year college student and 11th grader. So you're going to be hit a little bit with some of the things we're going to talk about.
And the nice thing is that we have a lot of content, a lot of good content tonight, but definitely room for Q&A at the end. And so I know sometimes we'll get questions from divorced families about how do we pay the bill, who could take out a loan, and we're happy to answer those questions too, once we get through the program.
Yeah.
And so, about to be divorced, happy to help you. All right, so we'll get started and welcome everyone. My name is Melissa Bassett, and I head up the in-school lending program here at SoFi. And Debbie Schwartz is the founder of Road to College, which I know many of you here tonight are here because of her wonderful Facebook page and email communications. And we have partnered together with Debbie for the past 3 or 4 years to bring content like this to you. We are happy to discuss, whether it's loans or grants, scholarships. But one thing Debbie came to us with early this year is changes to the FAFSA that are going to happen this year, but especially the changes that are going to affect divorced parents. So we'll cover both tonight. And I'm just going to say at the beginning, I have a little bit of a cold, so I'm going to go off mute, let Debbie do all the talking, encourage you when I'm not coughing. And want to welcome everyone, families that came to us from Road to College, our members and customers, friends from SoFi at Work companies, as well as our high school counselor network. So welcome high school families, Road to College subscribers, as well as SoFi members. Just a quick legal, we're going to get the legal stuff out of the way here. Always borrow responsibly. We're not going to be covering loans tonight, but we did cover loans 2 weeks ago in our student loan series. And so at the end of this is our 5th program that Debbie and I have done over the past 2 months. All of our programs are on YouTube. And after tonight's presentation, you'll all be getting a link to all of the programs we did over the past spring. So if you missed the earlier ones that we did, not to worry, they are recorded, as this one will be.
And I really encourage people to look at, particularly I'm seeing there's a lot of families here with juniors. The session we just did about 2 weeks ago, which was on loans, and you would think, well, I don't need to learn that yet because I don't have to borrow loans yet. But I think it's actually great to see that information when you're in the process of choosing a college and understanding what the loan limits are and kind of where you can get loans from, because that hopefully will impact how you create that college list and where your student makes a final decision.
Yeah, for sure. We have about an hour tonight for the session. I think the content will wrap up probably in about 30-35 minutes, but Debbie and I do get a ton of questions during these programs, so we'll take them as they come in. Feel free to throw them into the Q&A direct or into the chat. I'll be watching both of those as Debbie goes through the content, and we will certainly get to yours. So Deb, anything else you want to say about Road to College before we jump in?
Oh, thanks. I mean, I think if you are a follower from Road to College, you know that we love to partner with companies like SoFi and work with Melissa to be able to support educating families about the process. It's unfortunately become a complicated process from lots of different angles, not just the financial side, but the academic side and test optional, and all these things have to mix together. And we really devote our time and efforts to educating families so that you can manage this process as well as possible and then make good decisions at the end.
Yeah, excellent. Okay, let's jump in. Here's our agenda.
Yep. So I'm going to start out, and this is actually, I think, good for families here with juniors. You can start to call yourself rising seniors. Just talk a little bit about, financial aid, so you kind of have a grounding in some of the things that we're talking about. Then we'll talk about the actual changes to the FAFSA, which is called the FAFSA Simplification Act, although there's only one thing I think that is simple. Everything else has become more complicated, but I guess they like to use that name and maybe it makes them feel better. Yeah. And then we'll focus specifically on the impact to divorced parents.
Excellent.
So for those of you who may be newer to this space and the whole idea of, paying for college and all the forms that are required, the FAFSA is the main federal financial aid form. It is free. It is something you'll apply to on the studentaid.gov website. You will become pretty familiar with the studentaid.gov website, and it is required of all colleges that are giving out any sort of federal money, and it's also usually linked to state grants that you might be eligible for as well. So and again, on previous webinars that Melissa and I have done, we emphasize the FAFSA because it obviously is going to help your student potentially get aid from the college, and we'll talk a little bit about that. But the other reason is because it's the only way that your student will be able to borrow federal student loans, which are the best student loans that they should borrow first if you need to do any borrowing. And it is the only way, if you're considering taking out a Parent Plus loan, you have to fill out the FAFSA to get access to the Parent Plus loan. So it's a really important document. Whether or not you ultimately get need-based aid from the college, most people still fill it out to get access to these loans.
Yeah, and you should always complete it. Debbie and I talk about this almost on every webinar that we do. No matter what your friend tells you, your FAFSA information is not going to be sent over to the development, department. They're not going to ask you for money. It's not going to go against you. And like Debbie said, it applies to all the federal programs and grants. And so while you may be in a position now where you say, well, I don't need that, and unfortunately have a job loss, say halfway through the semester, and you want to access these programs, it's important to have that form in. The other thing we like to tell everybody is that do not pay anyone to complete the FAFSA on your behalf.
And actually, sorry, as part of the FAFSA the Simplification Act, it is now illegal to pay anybody to fill out the form. So.
Awesome. So excellent. There's a lot of resources out there online, also in YouTube, and then we'll give you the links, but definitely it may be intimidating because it's the first time you're working with these numbers for college, but there's no way, to get around it. There's no tricks to it, and plenty of help out there. So awesome.
Great. So the FAFSA gives you access to the federal funds that we just talked about, and it will give access to federal need-based aid for lower income students, and we'll talk a little bit about that. The other form is called the CSS profile. It is required by, I don't have the exact number, but I'm going to say somewhere around 300 schools. And these schools ask you to fill out this form. It is much more extensive in the questions that they ask compared to the FAFSA. And the reason why it is because these schools are using the information in the CSS profile to give out their institutional money. So, they are asking more information to get a really better understanding of your financial situation. And this is a different form. It's actually administered by the College Board, which you may not love that organization overall. I kind of agree, but they are the only people who manage the CSS profile for the colleges. And ultimately, I would say that the College Board actually has a list of schools that require the CSS profile. You can go there and look at that list. I actually always check directly with the college itself. I've seen little errors that where a college actually requires a CSS profile and it's not on the College Board list. So this, by the time you're going to need to fill this out, it's going to be clear from the college's website, but just really make sure that you double check that which exact forms your college is requiring that your student is applying to. And there are a handful of schools, I actually think like less than 5, that actually have their own specific institutional application instead of the CSS profile. And again, these tend to be schools with a lot of large endowments because they're giving out their money. I think the 2 schools that come to mind that have their own form are Princeton and MIT. So you can tell it's those types of schools. So, Jen, this is just like a quick summary. The places where, money is going to come from to help your family pay for college is hopefully there is some savings. And usually it's in the form of just, regular personal savings that you might have put aside. Hopefully a lot of people have taken advantage of 529 plans or Coverdell. So, that's basically money that's, coming from your family. The other source, which isn't here as a bullet point, is a lot of people try and cash flow it, so they will kind of look at their daily expenses and see if there's something I can cut out. And, or they might choose to reduce their savings in the years that this student is going to college and immediately use that money towards college. So that's one bucket. The other bucket is free money, and free money comes in a lot of different forms. And again, we've done webinars in more detail on this, but the biggest source of free money is actually from the college itself. And it's going to come in either merit scholarships if you aren't eligible for any need-based aid, or it will come in need-based funding, but it's basically the college's institutional owned money, and they will tend to give out the largest amount of scholarship. Your student can apply to private scholarships. Not saying it's bad, they just tend to be pretty time intensive. And I say it's like a numbers game. that you have to apply usually to a pretty large number of scholarships. Maybe you will win, one or two of them. They will probably be in the price range or the award amount of like, $1,000 to maybe $5,000. And the thing about the private scholarships is that they're not renewable. So the effort that your student does once has to be repeated multiple times. Again, that's why, it's so important to really be applying to the right schools that can give your student the money, because the scholarships that they'll tend to get from the colleges will probably range, honestly, from like $10,000 to $30,000, and they will be renewable. So they'll get them for 4 years. And then last, if there isn't enough savings plus free money that you get, and then there's a gap, which, between what the college costs and what you can afford to pay, you're going to have to look to borrow loans. We already kind of mentioned there's the federal loans that are for your student. There are Parent Plus loans that you may choose to look into. And then there are private loans. And so that's a whole nother webinar that we did, but this is just kind of gives you like a quick overview.
And it's not too early to start planning.
Right. So you may be hearing, or if not, you will start to be hearing this word, the cost of attendance, which is the official cost that colleges calculate that it will cost for a student to attend that school. It includes, tuition, room and board. It will include costs of books, some travel potentially, and they will have this information on their website. And then, so that's kind of the maximum that it will cost to attend that college. And for the college to determine what your family's financial need is, they will take their cost of attendance and they will subtract out, we're saying here, it's called the calculated family contribution. In previous years, that family contribution was actually called EFC, if you've heard that terminology before, which was expected family contribution. And now it's going to be changed to something called SAI, and we'll talk about that, which is called the Student Aid Index. But the use of that number, whether it was the EFC or the SAI, is to help determine what type of financial need your family has. And then based on that financial need, you may be eligible for government funds, or the college may decide to give you need-based aid. So it's really important to know these numbers. Actually, a third number I'll throw in to know, which is your budget, and I'll talk about that in a second. But it's when you're looking at colleges, and if a lot of people here are juniors, if you're trying to figure out what's that college going to cost your family, you need to kind of start to do some estimating, looking at the cost of attendance, calculating subtracting what your SAI is, or EFC, and then if your SAI is less than the cost of attendance, you potentially are eligible for need-based aid. Then you have to see if the college is going to give need-based aid. But a lot of cases, we deal with a lot of families where, unfortunately, it's the opposite, where their family contribution is higher than the cost of attendance. And doesn't mean that they can afford college. It just means that they're not going to be eligible for any need-based aid. And for those families, that's why there's such a heavy focus on looking for colleges that offer merit scholarships. So it's just important to know kind of what bucket you're in, and then you know what type of colleges to look for, and you know what financial aid policies to understand.
Excellent. That's a lot of acronyms.
Yes. Okay. Let me take a little drink before we get going.
Yeah.
So let's start talking about the FAFSA Simplification Act, which is what the government passed, I think about 2 or 3 years ago, and what is in it, and how it's going to impact your student, and potentially what college is going to cost you. I guess the reason why they call it simplification is really the first bullet point. They do reduce the number of questions that are needed. So it used to be 108 questions. It's going to go down to 36. The other thing that's making it easier or simplified is that the information from your taxes is automatically going to be pulled from the IRS system. In the past, that was an option. So in the past, you could decide whether you wanted to do that automatic pull. And in a lot of cases, people did it because for lots of reasons. But now you're just not even going to have the choice. Everybody who fills out the FAFSA, your FSA ID, which you'll learn about a little bit, later in the year, which is the ID that your student has to create, but you as a parent has to create to fill out the FAFSA, is going to be used to match with your IRS information, and it's going to be automatically pulled in.
And an important thing too, Deb, about the IRS data retrieval tool that I experienced myself when I was doing the FAFSA is that although many of us do our taxes online, and you renew it year over year, you don't even look at the demographic information. If your name, so say it's Melissa A. Bassett is on my taxes, but I go by Melissa Bassett in real life, if you're not exact on that data retrieval tool, it's not going to work. And I know a lot of families say, like, I tried and it failed and I'm frustrated. Just a good rule of thumb for those of you that are starting to complete the FAFSA this fall is to have your first page of your tax return so that you're filling it in exactly, because they do it not only on your social security number, but also on your name and address exactly as you filed.
Yeah.
Exactly as you filed.
So I noticed that Deborah wrote in the comments or in the chat, she says that her high school requires senior families to complete the FAFSA. I'm just curious if you want to share, Deborah, what state you're in. There are definitely some states that have that requirement. And that's actually another reason why the FAFSA Simplification Act was put into effect along with a lot of other changes. But one of the major goals was to get more students and families to fill out the FAFSA. I think I just, in kind of pulling together on my notes for tonight's presentation, I saw a stat that said that currently only 60% of students fill out the FAFSA. So, the government wants to increase that number because it's probably a good likelihood that students who could really use the aid, maybe lower income families, are not filling out the FAFSA. So to make it as simple as possible, they're hoping it will increase that percentage. Plus, as you mentioned, some states are also require it as part of graduation. Okay, so the other change is what I already alluded to a little bit, and it's a little bit just terminology, but for people who have been in the financial aid space and families who have dealt with it, it maybe will make a little bit more sense. EFC stood for expected family contribution, and just that language kind of implied to a lot of families, okay, this is what I'm going to have to pay, right? So if your expected family contribution came out to $30,000, that's what you thought as a family it would cost you to send your student to college. And that never came out to be the case, because that's not really how the EFC was used. In fact, actually, we used to say the EFC, whatever your dollar amount was, it was the minimum maybe you would have to pay, but it was not at all likely what you would end up paying. So to kind of minimize that confusion, they've changed the language to the student aid index. And it actually makes more sense to me. I'm interpreting it as, an index. So it's kind of saying, how do I compare in my need compared to another student? It's not saying that whatever this number is, that's what I'm going to end up paying. It's just kind of putting everybody on a comparison against each other and saying, you're more needy than somebody else, or maybe you're less needy than another family. So it's just kind of giving a comparison of the index. It's not saying whatever that number is, that's not what you're going to end up paying. It's just kind of like a starting point.
Hey, Debbie, how do we deal with parents? Because with the FAFSA, it's still prior year, right? So
yes,
you're using financials from 2 years ago to apply for aid. What does a family do if they were separated 2 years ago and are now divorced? How do they get over that hurdle with the FAFSA?
Yeah, that's a good question. I'm pretty sure that, and I will follow up to confirm that you will end up kind of being considered a divorced family, and you might have to separate out your tax information. But actually but as I'm talking this through, this whole concept of it being pulled from the IRS system, there were a few cases where you can be exempt from being pulled from the IRS system. This might be one of them because as we're talking, but I will follow up and confirm, they're going to end up pulling your combined, tax form and not necessarily, a divorced version of it.
And we're getting a lot of questions both in the chat and the Q&A about non-participatory parents. And what we would encourage you to do, of course, you have to complete the FAFSA. You will be assigned a financial aid counselor, whatever school your student goes to. And you should absolutely, through the admissions process, you should absolutely make an appointment online. On the phone, Zoom or whatever, to discuss your individual circumstance. They deal with this stuff all the time.
All the time.
And they're not going to say, oh, I'm sorry, no, these are the rules. They are very understanding, but better to identify that upfront during the admissions process as you're applying versus waiting till they get accepted. And then you're trying to, decide how you're going to meet the bill.
And so, Melissa, you said something which I just want to emphasize because I realized I wanted to say it at the beginning, but I didn't. So the FAFSA that we're talking about is technically for the FAFSA 2024-2025. Those are the years that they put on it. And what that means is that's the school year that money is going to be used for. So this is for students who are going to be enrolled in college starting in usually the fall of 2024, and they are continuing into 2025. So just keep that in mind because that's how you'll see it, FAFSA 2024 to 2025. And one other thing that we kind of alluded to, and if you're new to this whole financial aid thing, is that the FAFSA and the CSS profile is based on what they call prior year taxes. So, and it's the prior year relative to the year your student is starting college or is enrolling in college. So again, this FAFSA is for students that are starting in 2024. So that means that it's going to be based on your tax forms of 2022. So keep that in mind.
And that's where we run into those special circumstances where you may have, now you're divorced, and in 2022 or in 2023 or whatever special circumstances that have to be done through the office, the financial aid office. Debbie, what about a significant loss in income during that time also?
Yeah, so that falls under a financial aid appeal. So they, when you're going to fill out these forms, it is going to be based on, your 2022 income and the taxes. And absolutely, there could be from some families a change because it's 2 years has passed. It could be a change from what your financial situation was in 2022 versus 2024. You can tell the colleges about that as part of the financial aid appeal process, which happens after your student gets accepted and you get the financial aid award. And I know it's nerve-wracking because you had this loss and you just want to tell them, but they can't process it until it's part of that timing of after they send you the award information. Then you can come back and say, hey, now this is my situation. And then and this happens a lot. It happened a lot during COVID. It's not unusual, and they are prepared. They know that this is coming from families. Yeah, so Lori's saying, I heard the IRS retrieval tool will be mandatory, no more manual input. That is absolutely correct. There is, again, and I didn't actually print it out, but there are a few situations where they will let you do a manual input, but the majority of cases, it's going to be an automatic retrieval. And that's to simplify the process. The one other thing I will kind of also maybe just for background information. So the FAFSA looks at two buckets of information. They're looking at your taxes. That's why we're talking about all about the IRS and pulling all the tax information. And they also look at your assets. So tax information is based on 2 years ago. It's so in the upcoming year, it's going to be based on the 2022 taxes. Your assets, which you fill that out, and that is not being automatically pulled from anywhere. So that's the form, that's the fields that you're still going to have to fill out. Is actually based on the day that you fill out FAFSA. So, so something to think about, and we're not going into huge detail about the actual formula of the FAFSA. other than to say that assets are usually assessed at about 5.6%. So whatever your assets are, they take about 5.6%, and they say that amount can be used towards your students' colleges, and that's for parent assets. Student assets, they actually assess at 20% because they assume that whatever your student has, more of that should be able to go towards college. So, and again, we can do like a separate webinar on all these details, because that's something you might want to think about. If your student has money, in their account, you can move it out of the account, under your name, so it gets assessed at a lower rate. So I just wanted you to kind of think that or just keep in mind, there's taxes that the FAFSA uses, and then there's your assets. Assets are the day of you fill it in the form. Taxes are 2 years prior.
Hey, Deb, one question on the FAFSA that came in too is, people might want to know what they're eligible for from a federal perspective before they apply to certain schools. And are you able, I don't know, you'd get your EFC or SAI, but I don't think you'd get a package before the admission letter, would you?
You do not get a package before the admission letter. The ways to estimate, and a few different ways. One is, this is the purpose of the net price calculators on the college's websites. And again, you may not be that familiar with the terminology yet, kind of as, families with juniors, you're starting to get into this. But the net price calculator, every college is required by the government to have it on their website. Unfortunately, that's the only requirements that they actually have the calculator. There isn't a requirement in terms of accuracy, but I would still do it. It gives you a gauge. So that will tell you how much that school might cost you. It doesn't always tell you what your EFC/SAI is going to be.
And it's kind of like it takes you through a mini application. And so the net price calculator will take in your financial information, the program that your student is applying to, and kind of calculate an estimation of what you would pay. So for the parent that asked that question, I would go to the school's websites that that you're looking at or targeting, go to their search tool. Net price calculator is the tool that you want to use, and see, you'll get some preliminary results there.
So that's one way.
Waiting for FAFSA, yeah.
The second is, I would also go to the College Board, and you can just Google College Board. It's still probably called this EFC calculator because they haven't changed it yet. And they actually have a very good estimating calculator that works well for the colleges that have CSS profiles. Because actually, believe it or not, the College Board actually knows all the calculations that these colleges are using. So they do a pretty good estimation on their calculator. And then the third, which is not available yet, and I actually searched for it, is that the government actually does put out a pretty detailed document on the actual formula. Like they will show you, this is line 8 and you subtract line 7. And if you are that detailed, which is, which would be good, you might want to actually get that document and just fill it out and follow the instructions. And that might actually give you the most accurate version of what your new SAI will be.
Excellent. All right, let's move ahead so we can get to the content. And there's a ton of good questions, I think, that will be answered with some of this stuff.
Yes, I think, we can just switch. Yes, great. So one of the biggest changes is really a help for students from lower income families. So I'm just going to go through it. I don't know how many it affects the people who are on tonight, but really that was one of the goals of the FAFSA simplification, is to increase the Pell Grant amount and to increase the students who are eligible for it. So they the actual max Pell Grant is going to increase by $500. It's going to the maximum amount is $7,395. The bigger change for some students is that if you had a potentially an EFC of 0, you can now actually have an SAI that's negative. And that's going to be for some families who don't actually don't have to fill out any federal tax forms. If you fall into that bucket, which I'm sure families here don't necessarily, but anyhow, it helps to increase the amount of need-based aid a college can give them now with having a negative SAI. And then another change is that they took away this lifetime limit. So in the past, even if a student was eligible for not just Pell Grants, but eligible for federal aid, and a lot of that had to do with subsidized loans. If they got to a certain time of that they were still in school, even if they were eligible, they were no longer able to get those funds. So that time limit has changed. And I'm not going to talk about income protection yet because it's on a different slide. But so basically, bottom line to this is that if you're a student from a low income family that you potentially might have access to Pell Grants, you probably are going to get a little bit more, and there's probably more students who are going to be eligible for Pell Grants.
Sounds good. Okay,
so income protection allowance, which is part of the FAFSA calculation. There are some good changes and some not so good changes. One is, we'll kind of talk about it again, but if you're a divorced parent, in the past, child support used to have to be reported and added back to your income on FAFSA. And kind of what I alluded to is that, or actually I didn't give you this number, but income is assessed at a much higher rate to be used towards paying for college. So if the money is added to your income, then the assessment of what you could pay for college would increase. But now that child support is going to be added as an asset. So the asset percentage, which I mentioned, is 5.6%, much lower than the income assessment, which can go up to close to 50%. So there's a little bit of a benefit there. The other benefit is that the income protection amounts are also increasing. So there's a chart that you'll see when, if you want to look this up, that kind of shows how many people are in the family, and then and it gives you how much income can be protected, as part of the calculation. So that lower end is going to increase by $4,000, and then the high end is going to be increasing by $8,000. And the same thing is happening with the student. So there's an income protection allowance for parents. There's also an income protection allowance for students. And that income protection allowance is going to increase. It's increasing by $2,400. I think the max is going to go to $9,400. So what that means is that your student can earn, and let's encourage them to work and earn this money, they can earn up to $9,400 that will not be included in the FAFSA calculation.
Hey, Deb, a lot of questions too are centered around, in a lot of states, I guess child support ends on the date of high school graduation. And so then the parent wouldn't be getting any support, right? From the, in this case, the dads. So how is that handled as a parent is going in, no more child support is required, but then how does that factor into the FAFSA if the mom is the one with custody?
Well, okay, let me hold that a little bit, because the idea, the fact that there is custody actually doesn't play into this yet. Okay. So I think when I answer that question, when we talk about, but just for that particular question, just think about, yes, in some states, the child support ends at 18, but again, these forms are based on taxes from 2 years prior. So they're going to be based on your taxes from when they were 16 and when you were still getting, child support.
Is alimony considered income?
I don't want to answer that. I'm not sure. I'm going to write that one down. I didn't see anything about that, so I don't know. Yeah, that's a good question. I mean, you would want it to not be, but it might be.
I don't believe that it is, but I guess some people are saying it's state-based.
Okay, and this last bullet point, I'm going to go into more detail as well. this is a big impact for any of those families. We already said, saw a few people who were both divorced and had triplets or twins. And even if you're not divorced, if you have any, if you have more than one student in college at the same time, again, you could have twins, but you could also have a freshman and a junior. That's multiple kids in college at the same time. So the income protection allowance is no longer going to take that into account. So in the past, there was this nice chart and it would say how many people are in the family, so it could be, if you had other dependents, maybe you were a family of 5 and you had, 2 in college at the same time. So you'd go down to the line that was 5, and then it would go over and it would, if you had 2 students in college at the same time, it would give you a higher, income protection. And now that's no longer the case. So you're going to get hurt in that way, plus in another way, as we talk about a little later.
So what would be, do you have a financial example to show, Debbie? Like, what would be an example? If you had 2 kids in college, would the income protection go up significantly?
I'm looking at some of the numbers here. It would go up by like 15%.
Okay.
Yeah. In fact, here it actually, for each additional child, this is from last year. I actually have the chart in front of me. For each additional college student, it would go up by about $3,400.
Okay.
Okay. Yeah. Let's go on. These are just the summary of some other changes that are happening. I think we talked about that the data is coming directly from the IRS system. There used to be a question for your sons about selective service. That's been removed. There's been they've removed any questions related to drug conviction. And then they've just added a few questions about gender, race, ethnicity. These questions, although they might bother some people that they are there, they are truly not factored into any of the calculations. It is just there for demographic analysis. Although I will say, and I don't have the answer to this, I'm going to follow up with this one too. I don't know, to be honest, if the colleges get that information in terms of these additional questions about sex, race, and ethnicity. So I'm kind of curious myself with everything else that's going on in college admissions, because that would be a little bit of an interesting loophole if they get that information. So
maybe just a point of clarification that's come in too. Before, when you had multiple children in question, there was a financial in the college, there was a financial benefit. And that benefit is going away.
Yes. So that's the 4th bullet point.
Excellent.
Removes the number of children in college question. Yes. So if you had, let's say 2, this is the way it used to work. You had 2 kids in college and your family contribution came out to $50,000. That was truly the family contribution. And so the FAFSA would actually then divide that between the 2 children and say, then each of them has an EFC of $25,000, because it was calculating what your family could pay, and your family was saying it was could afford $50,000. So by the number of kids you had in college, it would reduce each individual student's EFC. This is the big change. This has been taken away.
And do you think that schools are going to be inundated with calls for exceptions?
Well, so the slight kind of caveat to this is when I say this has been taken away. So the EFC is no longer going to be split based on the number of kids in college, but that relates to any federal funds. So if you were going to, get work study or potentially, subsidized federal loans, which is important, it might impact those types of aid. The idea of what the college will do with this information is still a little bit of an unknown. So the college does not, when the college is giving out their own money, whether it's for need-based purposes or for merit scholarships, they do not have to follow what the government is saying. When they're giving out the government money, they have to follow it. But when they're giving out their own money, they do not have to, remove this number of kids in college question. The good thing is that question is still going to be on the FAFSA, So colleges will know if you have multiple kids in college. It's just that the FAFSA isn't going to use that information. And then the colleges now have to decide what they're going to do with it. And I honestly don't think that there's enough, like I haven't heard enough from colleges about how they're going to handle it. I will tell you that for families with students right now who are graduating in 2023, who had multiple students in college at the same time, we told every one of our families to call the schools that their student was accepted to and that they were planning on going to. And if they got any need-based aid, to ask the schools what they were planning on doing. I'll just give you an example. One family, actually, he happened to have twins. That's why, he had two in college at the same time. And one of the students was going to Wash U, and the other one got accepted to University of Michigan. Wash U was quick to respond. They said, we're going to continue to factor in the information that you have two in college. And so whatever the aid is that you got this year, you're going to continue to get that based on two in college. We're going to use that information in our formulas. University of Michigan got back to him and said, we don't know yet. So that's a tough to deal with, because he's got to commit. Well, he did, his student committed, and he doesn't really know next year what University of Michigan's going to do. So that's still a open hole, but at least by the time your students have to make decisions, you will know how the colleges are handling it. You just may not know in advance to decide where your student should apply to college.
Debbie, a lot of questions are coming in about the FAFSA in a divorce situation, and who fills it out and who has to contribute what.
Okay, next slide.
Excellent. Love it.
Okay, so yes, here's the other change for divorced parents. In the past, the parent who needed to fill out FAFSA, it was based on where the student spent the most amount of time. And usually it was at where the student spent 51% of their time. It was that parent who was responsible for filling out FAFSA. I'm not saying it was, a loophole, but it was strategic. A lot of divorced families might strategically in the past think about, where the student was going to spend 51% of the time. And then by default, he was usually with the family that or the parent that had the lower income. That worked out well, because that was then the parent that filled out the FAFSA. So that's the big change, right? Going forward, it is the parent that provides the most financial support who is the parent who needs to fill out the FAFSA. And it's funny, I actually did a lot of research to look to see about how the government is determining which is the parent that provides the most financial support. They have not actually provided any specifics about how they are going to determine that and if they're going to verify it. But I mean, just knowing the way financial aid offices work, they will probably do what I would call as a sniff test, right? So they're probably going to look at, whoever the parent is who fills out the form. If their income just doesn't seem, that it would be enough to, sustain that student, they're probably going to question, is this really the right parent filling out the form? And all I can say is you don't want to fool around with these forms. I would just be truthful. It will catch up to you one way or the other, because if you are flagged, I mean, and particularly this year, the financial aid offices are probably going to pay more attention to this change. And they might even actually have their own forms that they fill out, that they want you to fill out, so that you can confirm to them that the right parent is filling out the FAFSA. So again, it's the parent who is providing the more financial support is the parent who's going to fill out the FAFSA. So that's one major change. The second one is related to how do you determine what the household size is. So for example, now maybe your student lives with mom, right? And mom is not the parent that provides more of the financial support. It's the father. So now, but the student's not living with the father, but the father has, other dependents. And so so the father is the parent filling out the FAFSA. And then in determining who else is in that family size, it's going to look at if the father is, and this really comes into play if the father is, or the other parent is remarried, and then there are other dependents involved. So in the past, honestly, if you were remarried, it took into account all of your step parents' financial information, and now they are trying to be a little bit more careful. And so if there's another student or another child in the family that's the step parents' child, they're only going to be included if they live there more than half the tax year, and if they're under 19, or if they're a college student, if they're under 24. So there's a little bit of clarification about how to determine what that family size is, but the bigger change is it's the parent who's providing the most financial support who's going to fill out the FAFSA.
So Debbie, how and a lot of question on this, what's the test for that though? So if I say to my ex, you fill it out, I know you make more, but we're divorced, I really don't know his information, right? How is it fair? Like, how do we find out who is that person? And then what happens if the parents are alternating, like, I'm going to claim the kid this year on my taxes? The deduction is not that great, right? But what if someone does on one and someone else claims the child on another? Is the school going to be looking to who claimed the kid?
Well, technically, you're going to have to fill out the FAFSA every year, and you could switch. If one year one parent is, paying more, then absolutely that might be the parent who has to fill it out, in a different year. I agree with you. This is kind of like it's a black hole right now. They just kind of put out the statement that the parent who financially supports the student more is the one who needs to fill it out, but there aren't any sort of specifications about how they're going to determine that. As of today, there aren't any specifications. I believe, so there's one other big thing which I realize now we didn't talk about is the timing of the FAFSA. So this new FAFSA is not going to be open until December 1st. Normally FAFSAs are open October 1st. So the reason why I say that between now and December 1st, I with strong confidence, believe that the government is going to clarify and clean up this kind of like open-ended, what's the definition of the parent who is financially supports the student more, and colleges will also clean this up. I did hear from one college that they are, again, like thinking of sending out their own form that you're going to have to fill out to verify that the correct parent is filling out the FAFSA. And again, I'm sure that they will, ask, where does the student live? What are their, general expenses? Who pays for healthcare? They might get this specific, who claims the student as a dependent. So I'm sure that there's enough questions that the colleges are going to be able to figure out whether or not, honestly, you're telling the truth.
Yeah, it's a ton of questions about it though. It's a great question on who provides, what is the quantified
What's the litmus test?
Yeah.
Yeah.
It doesn't seem fair, really.
Yeah. No, it's a good point. So
About 8 minutes left. Just give me a quick time check.
Okay, thanks. So there's only one other major thing I want to talk about after this chart. This is just a summary of kind of where the rules were before and kind of what's changing. So if you were and again, this is all relative to the 2020. Well, I shouldn't say that. If whatever your status is come this fall, you might have to, and if your status was not that in 2022, you take your status of what it was as you're filling out the FAFSA, and then you might have to make adjustments to the 2022 taxes, because that was to that question earlier about we were just separated in 2022, but now we're divorced.
Okay.
So here's the conversation about the when all this is going into effect. So originally it was supposed to be in effect October 1st of this fall. And about 2 months ago, the government said, which we kind of all probably expected, is that they weren't going to be able to make the timeline. So They aren't going to have all these changes in place by October 1st, but they now promise, and I think they really are going to make it, because I think the colleges will just collapse if they don't have it by December 1st. So the new FAFSA is going to be open December 1st. So what does this mean for your student if you're applying this fall, right? Especially if you're applying early decision or early action or even rolling, right? All of those admission deadlines are staying the same. So, some schools open rolling admission actually in August. A lot of schools have early action deadlines starting October 15th. Definitely November 1st is a big one. Early decision deadlines happen November 1st and November 15th. If your student wants to apply to any of those early programs, they still need to apply by those deadlines, even though the financial aid forms are not going to be open until December. And so this is what I believe is going to happen. Again, there's nothing hard and fast that the colleges have put out. This is just kind of like some of the chatter that's been going on, is that, first of all, the schools that require the CSS profile they're not impacted. I mean, they are impacted by this, but their CSS profile form is going to be up and running as of October 1st. So if your student is applying to a school that is asking for the CSS profile, please don't miss that deadline. Okay. Be ready for October 1st to fill out the CSS profile. That's still going to go into effect. And those schools that ask for the CSS profile are also at some point going to need your FAFSA, but they will probably be able to give you a estimated financial aid award if your student is accepted. You'll know that whether or not your student is accepted from those schools, and you'll probably get an estimated award, but you won't be able to get a final award until you fill out the FAFSA. And so they'll probably, when that becomes available, December 1st, say, okay, we'll give you a finalized award in a few weeks. And then for all those schools that have these early action or early decision deadlines and only take FAFSA, again, I think that they will tell you whether your student has been accepted, but they can't give you any sort of financial aid award information. And they probably won't, I'm going to guess, until beginning of January. Because if the if the system doesn't open until December 1st, they're going to need a while to process the information. So who does this impact for the early decision or early action students? It really only impacts the students who are applying early decision and who also might receive aid, right? Because those are the students that are going to be accepted, but they're not going to know what the cost is. And in another webinar that we've done, we talked about this whole binding early decision. And quite honestly, there's a little loophole that says, even though your student has applied early decision, when you get the financial aid package, if you truly cannot afford it, you can back out of that agreement. But let me also say that those schools that usually or you apply early decision, they tend to have much better net price calculators. So I would still do the net price calculator. It will give you an idea of if you're going to receive any aid. And if you are going to receive aid and your student gets accepted early decision, you're not going to be probably forced to make that final commitment until you get the actual aid package. Everybody else, this actually doesn't really impact that much, because if your student's applying early action and you don't get the aid package when they find out whether they've gotten in or not, that's okay, because you're not actually in a binding situation. So I wanted to just kind of hopefully calm people's nerves about this concept that the form isn't going to be open until December 1st, even though there are a lot of early deadlines. It's going to work out okay.
Yeah, and I just want to point out, we've had a ton of questions, Deb, in the Q&A and in the chat. And Debbie was talking about this before we joined, right before we joined the webinar. This is the first for us. This is our first kind of divorce, new FAFSA webinar. We're learning right along with you. Debbie's done a ton of research on it, but there are a lot of unknowns, especially around the early decision and when you can accept, and then also which parent is determined as the one that's making the most. And so we will continue to do our parts. We will continue to publish articles as we learn more. But we appreciate the questions that you gave us, because there's certainly so many unknowns. And as someone that works closely with the colleges, they are also anxious. This pushes everything that they do. As you can imagine, admissions is a huge, lift on college campuses, and it pushes everything back for them. So unfortunately, we're all kind of in this hurry up and wait type of situation.
Yeah, Melissa, I mean, I'm hoping that we'll be able to download these questions and maybe send something out, to summarize some of the answers.
Will do. Okay, we're right about at the top of the hour. This will be in the email that you get from us in the presentation, but at SoFi, we do have a parent assistance line. And parent means anyone in the family. It's a college assistance line, and we can help you with questions about college financing, the FAFSA, federal loans. It's not a line to take an application. This is really a helpline for you. And so this will be included in the information that we send to you. And as a reminder for those of you that are joining us from SoFi at Work, there are information about our services, articles, and resources on your intranet. So many questions, Deb. So many questions. Let me see if I can get one more in. And it's really about sharing the responsibility. Who is the divorced parent responsible for paying for college, even though the alimony has ended or child support has ended?
That's a great question. I don't know, Melissa, if you have more to add. I mean, legally, you cannot, force the divorce, the other parent to contribute to college. So,
yeah. And it's usually in the agreement. When you're getting divorced, college is usually determined in the agreement, where the parents have to say, like, I'll pay up to a certain amount or state scholarship. But as some of you know, there is no divorce enforcement police. So you may have an agreement, and if your ex-spouse doesn't agree to it, you have to go to court for that, or you have to go and unfortunately figure that out. So there's no, you are both the asker and the enforcer on some of those things. Super frustrating.
Yeah. And I saw a question earlier. I thought this was interesting and a good question about privacy. So in the CSS profile, which we didn't really go into detail, divorced families, both parents are going to have to fill out the profile. There's no leeway, only one parent fills it out. But the other parent does not get to see, or there is no access that the other parent sees the financial information. So it really is kept separate. And the same thing with the FAFSA, particularly, now with the IRS automatically connecting. There's actually no IRS information that even you are going to end up seeing, and so nobody else can see it as well.
And question about FAFSA ID. Yes, if you are the parent that's filled out in the past, and now with the new rules, the parent that has the most financial, commitment, they will have to get their own FAFSA ID as a parent. So parent number one and child already have it. You've been doing it for 2 years. Your husband needs to do it now. They have to get their own.
Yeah. And then there's one other quick question I see. About the early decision, can you back out of early decision, even if they meet the full need? I mean, look, at the end of the day, the early decision agreement, which you're going to end up signing, is not a legal form. So technically, yes, you could back out. You're probably going to, but it's a little bit personally for me, like of a moral question, because if they've met your full need, you probably should have known that ahead of time, like what your full need is, and particularly doing the net price calculator. So you should go into the early decision schools knowing a pretty close estimation of what it's going to cost. So you should, make that decision before even allowing your student to apply, whether or not you're going to be willing to pay for it. So technically, yes, you can back out. There would just be your high school will be annoyed, the college will be annoyed, because they have met your full need. So they've done everything that they could on their side, and you're still backing out. So that means that you probably didn't do enough of your own homework before letting your student apply.
And just a quick question too, like, we're not here talking about the profile and experts on the profile here tonight. This is a FAFSA discussion. I know some people have had questions, comments, so it's handled this way, it's handled this way. The CSS profile is there for the schools to handle it the way that they want to. So
Right.
There's not a lot of uniformity across them. One school's going to ask you what year your car is, and another one's going to ask you about, custodial payments and things like that. So the schools choose their questions. Those are the questions they're going to ask in addition to the FAFSA. So we suggest, looking to the school, for answers on what they're going to ask.
But one other quick related to kind of like CSS profile, this is just a piece of advice. If you're divorced and your student is applying to lots of schools, I would at least and a lot of the schools are CSS profile, I would at least make sure to include one school, maybe more, that is FAFSA only. I think you just might want to have like a backup depending on how the school is going to treat all of the different income from different families in the CSS profile versus the FAFSA.
Absolutely.
And the other big difference between the two forms is the FAFSA does not ask for the value of your primary home, but the CSS profile does. So that is what bumps up and changes what your EFC, and technically is actually still an EFC on the CSS profile. They are not changing their language as of today that I know of. So you have the EFC from the CSS profile, and you're going to have the SAI from the FAFSA.
Yeah, and just to summarize too, like a lot of great questions tonight. We will download everything from the chat and the Q&A and put together either an article or a follow-up doc, because a lot of these great questions are new to us too. So you can count on us to get back with some of this info, and you will get the recording after tonight. Hey, thanks everybody for joining us. We really appreciate the questions and the time that you spent with us tonight.
Thank you.
Thank you,
See you soon.
All right, see ya.